Welcome to this explainer. Today, we're unlocking the vault on SAP FICO controls, specifically getting into how SAP S4HANA manages posting authorizations and periods. Hey, if you've ever wondered how large enterprises keep their financial data impeccably secure and, prevent massive disasters, you are absolutely in the right place. We're going to master the practical controls that govern every single transaction in the system.
Think about it for a second. What actually stops a brand new entry-level employee from accidentally or, hey, maybe intentionally posting a massive multi-million-dollar vendor invoice? Trust me, as a consultant, I've seen people try. Or what stops someone from booking a transaction into a financial period that was officially closed out last year? The financial risk of an uncontrolled system is absolutely massive. It could lead to audit failures, scrambled financial reporting, or a whole lot worse. To prevent this, SAP acts as an incredibly strict gatekeeper.
And those gatekeepers? That's exactly what we call SAP posting controls. Basically, these are the system configuration settings that dictate exactly who can post financial transactions, for exactly how much, and during which specific timeframes. I really want you to picture SAP S4HANA as a highly secure financial vault. You can't just stroll in and drop off a bag of money or take one out. You have to pass through highly specific, automated transaction gates.
Okay, let's dive right into this. Our roadmap for today covers the need for posting controls, setting up user posting limits, opening and closing periods, navigating the month-end close, and finally, securing that financial data. Let's get to it. Section 1. The need for posting controls. Because we absolutely have to protect the vault during standard daily operations, and especially during that frantic month-end close.
So every single transaction you try to execute in SAP, it has to pass through two sequential gatekeepers before it ever actually hits the ledger. Gate 1 checks your user tolerance. It's basically asking, who are you and how much money are you actually allowed to move? Then, Gate 2 checks the posting periods. This one asks, when are you trying to post this and where is it going? Fail either of these checks and the system throws a hard red error message right at the bottom of your screen and stops that posting dead in its tracks.
Moving on to Section 2. Let's explore that first gate, setting user posting limits through tolerance groups. In SAP, we manage the who and how much using these things called tolerance groups. You can build as many of these groups as you need for your business. Now, if a user isn't explicitly assigned to a group, SAP just defaults them to what's known as the blank tolerance group. This blank group usually contains very conservative, lower limits that safely cover the vast majority of standard employees. But for your financial controllers or senior managers who literally have to process large transactions, you create special tolerance groups with much higher limits, and you assign these straight to their specific user logon IDs. In the configuration, you're capping three massive things: the maximum amount per document, meaning the total of all debits or credits in one go, the maximum amount per open item in a customer or vendor account, and the maximum cash discount percentage an employee is allowed to grant.
Now, what's really interesting about this is that tolerance groups don't just cap those main document amounts. They also control the maximum tolerance for payment differences. Because, let's face it, in the real world, payments rarely match invoices down to the exact penny, right? A customer might short pay you by a few dollars or overpay slightly. Instead of leaving these tiny differences hanging open and causing massive reconciliation headaches later, the tolerance group dictates the exact limits for acceptable overpayments, which we treat as revenue, and underpayments, which get booked as expenses. If that difference falls within the user's tolerance, the system just lets them clear the transaction automatically. Easy.
All right, let's look at Section 3, opening and closing periods, or as you might know it, the classic OB52 gatekeeper. This is our second gatekeeper. To stop documents from landing in an incorrect fiscal period, say posting to last month when the books are already closed, SAP uses posting period variants, and it checks these periods hierarchically, based on account types. At the document header level, the system first checks the account type labeled with the plus sign. That plus sign? It's the master switch. It represents all accounts globally. If the period isn't open for the plus account type, the transaction fails immediately, no exceptions. But if it does pass that plus check, the system then drops down to the line item level, checking specific subledgers, like your customer or vendor accounts, just to see if the period is actually open for those specific types.
Within the posting period table, which you can manage via the traditional OB52 transaction or the newer Manage Posting Periods app in SAP S4HANA, you're going to see three distinct period intervals. Interval 1 is highly restricted and heavily recommended for special closing postings. Interval 2 is your standard workhorse. It's open for regular day-to-day business postings. And Interval 3? That one is dedicated specifically to postings flowing from the controlling module, or CO, over into financial accounting, or FI. And hey, if interval 3 is left blank, the system just falls back on the rules you set in intervals 1 and 2 for those CO postings.
I really want to highlight interval 1 because it is incredibly powerful. It acts like a strict VIP pass for the finance team. Say during month-end or year-end close, you want a specific period completely closed off to the general company, but open only for the accountants finalizing the books. To pull this off, you assign an authorization group right to interval 1. Anyone trying to post there absolutely must have the SAP authorization object F_BKPF_BUP assigned to their user profile, and the value has to match exactly what's sitting in that posting period table. It is just a brilliant way to lock down the system while still letting the closing team do their jobs.
Let's move to Section 4 and see how this all builds into a real business scenario for navigating the month-end close.
Imagine a typical accounting department at the end of the month. To stop new daily transactions from messing up the close, the very first step is locking down the subledgers. They'll close the period for the specific account types related to customers and vendors. But step 2 is totally crucial. The general ledger accounts, which sit in that main account interval, have to stay open just a bit longer. This gives the finance team breathing room to reconcile the general ledger with controlling for that period, without any rogue new vendor invoices sneaking in. Once that reconciliation is wrapped up, step 3 is finalizing and fully closing the period across all account types, the whole shebang.
Now, you might be wondering, how does this system even know which period you're aiming for? Well, it all comes down to a single field. When a user enters a document, they input a posting date. And to be clear, it's not the date printed on the physical invoice, but the posting date that actually matters here. Based entirely on that posting date, SAP S4HANA automatically figures out the correct posting period and fiscal year. It then seamlessly routes the transaction to update the figures for that specific period. So later, when you're pulling up an account balance, you're looking at results neatly organized by those automatically determined periods.
Finally, Section 5. Let's talk about securing financial data and maintaining system consistency across a massive enterprise.
And this brilliantly illustrates the true power of SAP's architecture, the variant principle. Look, large corporations don't just run on one company code. They might have dozens or even hundreds representing different legal entities all over the globe. Instead of forcing some poor IT admin to manually open and close financial periods for every single company code one by one, which, let's be honest, is a massive risk for human error, SAP lets several company codes share the exact same posting period variant. So when the corporate controller updates the periods in that one variant, boom, those posting periods are instantly and simultaneously opened or closed for every single assigned company code. It guarantees absolute consistency across the entire enterprise, literally saving hours of manual work.
So, we've checked out the vault doors. We've met the gatekeepers. We know exactly how tolerance groups restrict who can post and for how much. And we've seen how posting period variants control exactly when and where data can be posted, right down to the specific account type and authorized VIP user group. Guys, these aren't just minor configuration steps, they are the fundamental compliance safeguards of your entire financial system. Which leaves us with one final, very real thought to ponder. If auditors walked into your business today, would your SAP period configurations and tolerance groups actually survive a surprise audit? Take what you've learned today and go make sure your financial vault is fully secured. Thanks for joining me on this explainer.